WTI's upward movement was interrupted on Tuesday, with the movement of the commodities price action being wide, an indication of the sensitivity of the oil market to its fundamentals. In today's report, we have a look at the state of the US oil market, the situation in the Middle East, Hurricane Milton's possible effects, and the demand side of the international oil market. The report is to be concluded with a technical analysis of WTI's daily chart. We make a start with the data for the US oil market since our last report by noting that the Baker Hughes oil rig count dropped for a second time last Friday, this time by 5 oil rigs, indicating that the number of active oil rigs contracted to 479 in the US. The release tended to imply a slack in the US oil market, yet passed relatively unnoticed by oil traders. Signals for a slack in the US oil market intensified on Tuesday as the AP reported a substantial increase of US oil inventories, this time by 10.9 million barrels. The slack in the US oil market was reaffirmed also by EIA on Wednesday, as it also reported an increase in US oil inventories. Should we see further signs of a widening slack in the US oil market, we may see the data weighing on oil prices, as the demand levels in the US oil market would be lower than oil production. Hurricane Milton has made landfall on Sarasota, Florida today and is unleashing its fury. The hurricane has left millions in Florida without power, and millions have fled their homes in search of safety. At least one oil and gas platform in the US Gulf of Mexico was shut down on Monday. Most energy facilities and infrastructure on the US Gulf Coast, including oil and gas production facilities, liquefied natural gas plants and refineries, are expected to be out of the storm path, but the closure of terminals could temporarily disrupt exports and imports, as per Reuters. For the time being, we see the case for a disruption of operations in the area, yet we expect it to be temporary unless Hurricane Milton proves to be more destructive than expected. Hence, any potential bullish push for oil prices underpinned by the hurricane fundamentals may prove to be time limited. Despite a possible easing of market worries in the Middle East, the situation is still tense. It should be noted that efforts for a possible ceasefire intensified since the start of the week, weighing on oil prices. However, we expect any efforts for a ceasefire to fall through and Israel to respond to Iran's missile attack. The harder the attack of Israel on Iran, the more support oil prices may get. The question now also arises on how Iran will be responding to the Israeli attack, as such an event could provide an extension of market worries. One scenario would be a possible closure of the Hormuz Straits or an Iranian hit on oil facilities of neighboring Arab states. In such a scenario, OPEC may not be able or have a delay in covering for the lost Iranian oil production levels, which could create a violent movement upward higher for oil prices. On the other hand, should the situation start de-escalating, possibly with Israel choosing a softer Iranian target, we may see oil prices weakening. WTI's price went through a roller coaster ride in the past week, landing between the 71.15 support line and the $75.5 resistance level. On a technical basis, and for the time being, we see the case for the commodities price action to maintain a sideways motion, given that on Tuesday it broke the upward trend line guiding it since the first of the month, but the following day the 71.15 support line halted the drop. Furthermore, the RSI indicator tends to remain above but close to the reading of 50, implying some uncertainty among oil traders for the direction of the commodities price action. The bar for a change of trend is high in both directions. For a bullish outlook, we would require WTI's price to form a higher peak than the last one. Hence, the price action has to break the 75.5 resistance line and reach as high as the 78.70 resistance barrier. Should the bears take over, we may see WTI's price action breaking the 71.15 support line and aiming, if not reaching, the 68 support level. We hope that you found this report useful, and from all of us here at IronFX, best wishes for solid trading.